Good morning. This is Business Morning. Thank you for joining us. I'm Ladi Williams.
And I'm Eni John Mekwa. Welcome to the show. We start with the Senate, which has reviewed upward the revenue target for the Federal Inland Revenue Service by almost 50% to 7.61 trillion naira for 2021, as against 5.07 trillion naira budgeted in 2020. According to Chairman of the committee, Senator Solomon Adeola, 5.64 trillion naira is earmarked as revenue from non-oil components, while 1.96 trillion naira is expected from oil components. He adds that they anticipate marginal reduction in the taxable income of taxpayers and revenue collection due to effects of COVID-19 pandemic, as well as the exemption of some categories of taxpayers from payment of tax as enshrined in the 2019 and 2020 Finance Act. Similarly, the committee approved 216.64 billion naira as expenditure for the revenue-generating agency for the year.
And the Lagos Chamber of Commerce and Industry says the worsening security situation in the country will trigger further inflationary pressures on food prices due to the disruptive impact on agricultural activities. According to a statement by the Chamber, the security challenge has affected movement of goods and services and persons, thereby putting the country's image as an unsafe investment destination. Similarly, a statement by the Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture states that the trend of banditry and kidnapping will affect the distributive and logistics chain. The statement adds that the government should urgently address the fear by decentralizing the security ecosystem in order to curb the increasing number of cases across the country.
And the high debt service to revenue ratio is a major concern for the Debt Management Office, owing to the impact of the COVID-19 pandemic on Nigeria's public debt profile, fueled by increased borrowing amid dwindling revenues. According to Director General of DMO, Patience Oniha, there is a need for state government to domesticate debt laws to enhance implementation of the World Bank Assisted State Fiscal Transparency Program. She was speaking at a workshop organized for state governments on guidelines for legal framework on debt management operations. Let's hear her.
The first budget that was approved last year, the Appropriation Act, the total borrowing it had was about 1.6 trillion. So when COVID happened, what happened? Two things. You know what affects the federal affects the states as well. Two things. Your revenues, yes. And we all saw what happened. There were tankers of oil in the high seas with no buyers. Countries were offering discounts because refineries were shut, businesses were shut, countries were on lockdown. So a new budget had to be drawn up. And that budget has a borrowing of about over 4 trillion. Let me put it that way. Yes, 4.2, you're right, 4.198. Why? That was because of COVID. That same last year, we quickly had to rework the books. Not only because revenues dropped, but now you now suddenly realize you needed hospitals, you needed all kinds of facilities, you needed palliatives because of the lockdown, people were shut down. So your expenditure increased while your revenues dropped. Could we have said, no, we won't do anything? You had to do something, and without the revenues, it meant you had to borrow. So COVID caused economic slowdown, certainly lower revenues, and it is the duty of government to revive and ensure that the economies are sustained. The absolute size of Nigeria's borrowing, when you compare it to the gross domestic product, is not high, meaning debt to GDP ratio is not high. What is high is debt service to revenue ratio, and that concerns us. So if your total borrowing is small relative to your GDP, other countries have 80, over 100%. Ours is less than 22%. But in those countries, debt service to revenue is 10% or 15%. Because the countries have revenues from taxes and duties that people pay. Are you with me? So here we don't have that revenue. That's why debt service to revenue is high. So what is our worry? That debt service to revenue is high, not the absolute size of the debt stock.
Welcome back. You're still watching Business Morning. The World Bank estimates Nigeria's housing deficit to be 17 million as of 2019, and this figure is increasing yearly by about 20%. Nigeria's housing, about 21 trillion naira, will be required to finance the deficit. And this need is also an opportunity for private sector to create businesses and consequently provide jobs for the teeming youths in the country. But investors cashing in on the opportunity to reduce unemployment while reducing the housing deficit. One of such investors is Dr. Stephen Akintayo, Chief Executive Officer of GTEX Global. He's joining us now to weigh in on this conversation. Thank you for joining us.
Thank you for having me.
Good morning.
Good morning.
So this 17 million deficit, it's quite a massive gap. What are the consequences of having this sort of deficit?
Well, it leads to increase in price of properties. So too expensive to rent property in Nigeria, particularly Lagos, and it's a bit expensive to acquire. People don't know that the most expensive land in the world exists in Lagos, called Banana Island. It's the only place you need up to $2 million to get 600 square meters. It would have been New York, but they don't have land in New York. They sell floors. And so that can change, but it's good because for business, it means there are a lot of opportunities. People can come in and start a business and employ people. And the largest employer of labor anywhere in the world is real estate. Because tourism is part of real estate, agriculture is still real estate, and several sectors like that are still under real estate.
But why is the private sector not taking advantage of this gap?
Well, it's the partnership that needs to happen between the government and the commercial banks, right? So a lot of times we have investors in diaspora and Nigerians in diaspora say, I want to buy property in Nigeria, but it's too expensive. And I'm like, no, it's not. Because a 3-bedroom in Houston, for example, probably costs $250,000 US. But you just need to deposit $20,000. And you have your property, you move, you pay like 30 years, and you don't need a mortgage bank in the US or in the UK to own a property. So if the commercial banks and the government can work together and make sure that we, the developer, our job is to build the house and get our money and move out, right? But you, the banks, the government can say, hey, we will pay you, the developer, once you have somebody who has paid 20%, who has paid 15%. That's what happens in all the developed world. And that's why you're having people moving. Because I can, in 90 days, have my capital back, build more. And then like that, the cycle continues.
So you are a real estate investor. When we're talking of needing 21 trillion naira, to close this gap, we expect people like you to put in their money. What are you waiting for?
The reality is that I also require that people invest with me, right? And, security is a major issue before they will invest. You also have the issue of CFO. I've said it over and over again. One of the biggest injustices in Nigeria is to say a governor is the owner of the land. It doesn't make any sense anywhere in the world, right? Because indigenous people own the land anywhere. So when you create that system to say, once you are the governor, you own the land, and then it's you that needs to give CFO, that creates so much problem. So right now, even in many parts of Nigeria, the land is there. I mean, we're talking about Sambisa forest insecurity. The land is there. We should be building skyscrapers Dubai is sand and water. It's forest, literally, right? I mean, desert rather, not even forest. It's desert. And what exists in Sambisa is what Dubai is. It's just desert and water.
So the issue here is security.
Yes, security one, but even the government not giving people the CFO to make them take over. Right? I've said it, it's funny, but give me CFO of Sambisa, I will be skyscrapers.
What about the security? How much of that can you handle?
Oh, trust me, technology can do that. Technology, a lot of we underrate Nigerian youth, right? A Nigerian youth can come up with a mobile app that will help you to detect using artificial intelligence where kidnappers are, these things are done all over the world, and our youth can do it. You just need to open the system up, right, so that they can come in and do it.
When you say open the system up, what do you mean? What should be done, or what should the youth do?
Yeah. So I'll give I was born in Maiduguri, so I visited 2019 to do some donation in one of the IDP camps. And, a place that was supposed to take 2,000, 3,000 people, you have 35,000 people there. right? And I said when I went to the school, they had to be doing, sessions like 4 hours, per class because they don't have enough classroom. I said, you know what? I want to come in and build, classes. Nobody needs to pay me. It's my donation. I was born here. And you will not believe it. I'm still yet to get response. I had to almost try to even be lobbying somebody to help me meet the governor, hopefully, to use my money to build classrooms in a place. That's what we are saying about opening up. An
so
example.
the bureaucracy and
Bureaucracy skills,
politicking.
Yeah.
So what are some of the platforms and avenues in the property business to, mop up this unemployment
Especially when we talk
problem
about
we
the
have
ICT.
right
You
now?
talked about ICT.
Yeah. So one of the beautiful things that we are doing is to use the brokerage angle. Our company also exists in Dubai, US, and UK. We're a registered company and we have offices there. And one of the things you look at the Dubai economy, a lot of people have been able to have jobs, own their business through brokerage. And being a property broker, you don't need money. All you're doing is to connect with a credible developer and begin to market their properties using the internet. Because one of the things that COVID did was that people were now open to do a virtual tour. So just show me the property virtually, and I'm interested in paying for it. And that has opened up a lot of opportunity for young people. Most investors in Nigeria are Nigerians in diaspora. Right? You are looking at some years, some year was $5 billion. I think last year probably more than that came in from Nigerian diaspora to Nigeria. And many of them are using this to invest in properties. So if you can get young people, and that's what we're doing, train them. How do you use the internet? How do you package yourself? Because if you're going to sell me a property of 100 million, you have to look 100 million. So these are some of the things we're saying. But others, we need to come in and begin to say, okay, how can young people come into some of these sectors without money? There are areas you can come in without,
we still
cash.
have the issue of quack realtors.
Oh, absolutely.
Yeah, because now that it's even going virtual, we have to be
Exactly.
extra careful.
Anybody just wake up and say, I'm a real estate agent.
Exactly.
That usually is about greed. I still had somebody chatting me up this morning. I said, I want somewhere in Ibejuleki. It must be 2 million naira. It must have C of O. And I'm like, okay.
Get real.
Get real. Like, okay, it doesn't work that. So what part of the training is to say, it's not about cheap. It's about quality. It's about being sure that the property is genuine and people can have, because you're building your name. A good name is better than silver and gold. People have to be sure that you, the broker, through you, I bought a property and that thing is real.
And this is a part of what you're talking about at your conference. Tell us about
Exactly.
that.
Yeah. So one of the things we've done is to say, can we bring the best in the world? Right, to inspire, because somebody was sharing with me this. I said, when last did you hear any good news about Nigeria? I said, well, this is the good news. Okay, this is the good news, right? That we need to, and I really want to appeal to the private sector. We just have to step in, right? If all of us are playing this is government without government, we just have to step in our little space, right? The event is going to be hosting 12,000 people that are going to be trained by Ryan Sahant. Is the #1 property broker in the world. He does over $1 billion in property brokerage every year. He's based in New York. He's going to be speaking at the conference. We have Grant Cardone. He's done over $2.5 billion in real estate. We have Dr. John Maxwell. All of you should know John Maxwell, who is also going to be speaking about leadership. Because sometimes what is the problem we're seeing in Nigeria is that nobody just wants to own up a sector. And it's one of the things I decided that we have to do. For me, give me the headache of real estate in Nigeria. I'm taking that one, right? I have given myself title and but we have to own up, because leadership starts by leading yourself and just taking responsibility. Today you meet a governor, he's not owning up for a state. A senator is not owning up. A president is not owning up. We just have to start owning up. This is my space, and I'm going to take care of it. That's one of the reasons why we say Dr. John Maxwell, he's not into real estate, but he needs to speak to that, leadership thing. Because if you're saying people should become broker, they should invest, what's my own? How do we do it in this country when everything is not working? Own it. You were born for such a time as this.
How can people attend this conference?
So it's one of the things we've done is to make it virtual, hybrid, so you can attend virtually. We're hosting over 10,000 people will be watching virtually online, and then you can attend physically in Lagos, Nigeria, at Landmark Event Center, Oniru, Lagos. And then
When
in
is it?
Dubai, yeah, May 1st.
May 1st.
May 1st, starting 10 a.m. And for those in Dubai, it's starting, because we're also hosting it live in Dubai. So for Dubai, it's 1 p.m. Dubai time, 10 a.m. Nigerian time, Landmark Event Center. So physically, people can come.
So who can come?
Well, if you want to make something on the side, you can come, right? Because the concept of brokerage is a referral business, right? You know, I could be anybody and just, you first of all identify a legitimate real estate company or business? Can I just refer? The company will take care of showing the person the property, handling. So you're just doing referral. And usually, one of the things GTES has committed to do, our company, is to say, we will be creating 100,000 jobs through this brokerage program in the next 5 years. We currently have over 5,000 who have been empowered through this. And we're hoping this conference will empower another 12,000. And we already have people making money because we committed 15% of every single property we sell to the broker, right? And that is opening up the space. I mean, if we can provide 100,000 jobs in the next 5 years, that's how we can start mopping up this unemployment, you know, youths are not. Because look at, we keep shouting security, but you go to a place, you bring military, you dislodge them, like in the case of the IDP I saw. What job were those young 35,000 people in a place doing? There was no job. So there is a place where we, too, the private sector, need to come in. How do we begin to empower people? You know, how do we, rehabilitate them? How do we put, government can't do all. We have to also come in. And plus, it's our country. Plus, you don't have a business if the country disappears.
Don't have a place to live.
You don't have a place to live.
So for those who would come to this conference,
Yeah.
they expect to go back with the anticipation that they could be in business. Do you have a
Exactly.
requirement? Must they be graduate? Must they be a certain age? Or is just anybody come as you are?
Beautiful. Of course, you have to be 18 and above. You don't need to be a graduate, but you need to be trained. The truth is that anybody reigning in life are trained. You can't go far in life if you are not really skilled. And we have overemphasized this formal education. We forget that one of the richest man in this country, is Cosmos Maduka, who has started 5 or what. So it's not about the formal university masters, but you still have to be trained on understand what is property.
Them?
Yeah, that's what we're doing at the conference, right? And you still have to be, because knowledge is not a destination, it's a journey. Yeah. So it's a process, and you have to keep going through that. But people are open. There's no gender restriction, there's no educational restriction, but you have to be hungry.
Anyway, hopefully we have an invite.
Yes, I believe so.
VIP for the two of you.
Fantastic.
VIP event, definitely.
Thank you so much.
Thank you for
Dr.
having
Stephen
me.
Akintayo, the CEO of GTEX Global, and thank you for inviting us to your conference on the 1st of May.
VIP, don't forget.
VIP.
10 a.m.
All right, okay. Thank you so much.
Thank you for
Enjoy
having
the
me.
rest
I
of your
appreciate
day.
it. Thank you.
Thank you.
All right, we'll take a break now. When we come back, Commodities Market Update is next. You're welcome back. It's still business morning. Moving on to the commodities market now. Oil prices extended gains after rising 1% the previous session, as bullish forecasts on recovering demand this summer outweighed concerns about the impacts of rising COVID-19 cases in India, Japan, and Brazil. Brent crude for June rose 22 cents to $67.49 a barrel, while U.S. West Texas Intermediate crude for June was at $64.04 a barrel, up 18 cents. OPEC Plus stuck to their plans for a gradual easing of oil production restrictions from May to July after OPEC raised slightly its demand growth for 2021 to 6 million barrels per day. The group also expects global stocks to reach 2.95 billion barrels in July, taking them below the 2015-2019 average. The bank also expects vaccination campaigns in North America and Europe to boost oil demand to a record high of 101.5 million barrels per day this summer, by cautioning that rising COVID-19 cases in India and Brazil could hit local demand if deeper lockdowns are reimposed. Now, to talk more about the decision of OPEC Plus and other issues in the commodities market is Oluwambe Pelumi Olanubi. She's an analyst. with financial derivatives company. Good
Great to have
morning,
you.
Kelumi. Good to have you again
Morning.
today. We have some unfinished discussion from Tuesday.
Oh, yes.
Absolutely.
But first, let's talk about the decision of OPEC Plus. How do you think it will affect Nigeria?
Yes, so globally, oil price is actually, the oil price is actually determined by three major factors in this current time. First is the issue of rise in cases of COVID-19 infection. Secondly is the stimulus package by major economies, and also is the rate of vaccination. And also we know that the price of oil is majorly determined by the demand and supply, of oil prices. So we see this optimism in the market regardless of the increasing cases we've seen in India and other European countries, yes, in recent time. So despite of all that, we still see the market still being optimistic about, recovery. So we saw that this has actually pushed prices upward than what, and OPEC has actually said they are sticking with their plan to relax and production cut in this coming month, May, June, and July, as they had said before. So we hope that price levels, oil price, will still range about the $66 to probably $69 in the coming months.
Okay, well, the federal government, we still have this issue of PMS, price, and they've said they will not increase in May. But how sustainable is this with all that's going on in this market right now, with this volatility?
Yes, as we also saw yesterday that NNPC actually clearly stated that they spent an amount of 120 billion naira on subsidy, and they said they don't have that much again to remit the coming month, coming May and coming month. So
that's
we see
fact,
that as it is now, subsidy has come to die a natural death because the government cannot sustain it. Although they've said they cannot, they've told the public that they won't raise pump price. But the truth is, the landed cost of pump right now is valued at 212 to 232 naira, and it's still sold at the filling station. Anytime we go there, still buy it at 162 to 165. So this margin someone has to pay for it. And the truth is, we have seen the cloud gathered, we are feeling the breeze, someday the rain will fall.
And Labour has said that they will not take an increase until the refineries are repaired.
Yes.
So, I mean, where are we going
The truth is, we should all prepare for this increase. That is the way forward, because they can't sustain that huge amount every month to augment for subsidy, knowing fully well that we have other obligations. Government has other obligations that are more pressing. So although they might not eventually lift totally, but significantly we might see increase in pump price. And that would, of course, feed into inflation and all that.
Well,
so I think we should go to the discussion within her. FTC has predicted that the inflation rate will hit 25%.
Food inflation.
Food inflation, yes. We would like to know the factors you consider to arrive at this 25%.
First and foremost, most of our household staples, raw material used for some of these products, are imported. Like we discussed on Tuesday, if you remember, the issue with wheat, and we've seen even corn prices, global corn price has increased. Now cocoa, which is one of our major exports, we've seen that there is a decline in the price of cocoa, which is we've seen cocoa farmers clamoring for more funding to access more seedlings so that they can produce more. All these are actually factors. And also we see the seasonality issue. This is planting season, so there is limit to supply of food items in the market. Also, the issue of exchange rate pass-through effect on imported goods. Okay, we all know that Nigeria is an import-dependent country. If you look at each and every one of us, assess what we are wearing, we can see the imported components. Unfortunately so. So going forward, all these are still going to affect domestic prices one way or the other. And we forecast that if nothing is done in sense of MPC meeting should happen later in May, and we hope that probably they might tighten up a little just to curtail money supply and all that. That would probably help to reduce inflation. But if not, going forward, we see inflation rate still increasing, and it might reach, I'm afraid that it might reach as high as 25%. And that means it becomes more expensive to eat what you ate in January.
Wow. And you still have the same supply. For instance, if you're a salary earner, you don't have an increase. Even if you're doing businesses, where would the money just come from to increase your revenue?
Aside that, the real value of income is actually eroding, because because inflation is actually reducing the true wages, the true value of, yes. So because of that, what you would normally, your standard of living, one way or the other, is actually declining. And there is no help in the sense that governments who have a lot of obligation, and we've seen the issue of, during the COVID issues, trying palliatives and all that to support livelihood and all that. But going forward, government is more concerned about other important projects. For instance, the issue of infrastructural deficit, trying to raise exchange rates and all that. So
the government has their hands full.
Hands full, actually.
It sounds like a very complicated thing for the country.
It's actually a structure. I know where we try to see it. These factors driving inflation, are they structural issues? Are they transient issues that probably in the next couple of months they'll be eroded? Or are they persistent issues? And we found that, okay, majorly money supply is a persistent issue, because eventually we all say that inflation is a monetary phenomenon. But beyond that, issues like seasonality, issues like insecurity, even issues like we said, increase in imports, they are all structural issues. And if structural issues are not dealt with, we'll keep having these factors pushing up prices, commodity prices.
Anyway, you talked about the MPC meeting, but the U.S. Fed kept the benchmark rates unchanged. And was this expected, and how are the markets reacting to this at this point?
Yes, so the Fed had a 2 days intensive meeting, and Federal Reserve is actually the CBN, Central Bank of the United States. So they actually came out and they left benchmark rate unchanged, showing their support for recovery in the United States. And this has a very significant impact, not just on Nigeria, but even the global economy. This is because leaving this benchmark rate unchanged means that the US dollar will be stable in the real time, as against markets optimism, or skepticism rather, because they were hoping they might raise interest rates. And if they had done that, that would increase the value of the dollar. And this will affect commodity prices, because about 70% of the world reserve is actually denominated in dollars, and also global international trade, about 90% of international trade is actually carried out in dollars. And we understand that commodity prices are priced in dollars. There is an inverse relationship between the value of dollar and commodity prices. So with the Fed leaving rates unchanged, it's a good news, because commodity prices does not necessarily have to increase, except for maybe commodity-specific factors that might drive each commodity. But for countries that import, Nigeria, we import wheat, we import sorghum, we import quite a number of produce that we use in our production process. So if leaving this rate unchanged means that we might not necessarily have increase using this route, although we still have the impact of exchange rate pass-through effect and other commodity-related reasons.
So external reserves for Nigeria has been on an uptick for a while, but do you see a drop?
Currently, the external reserve has actually dropped. And I believe that one of the reasons that this has happened, or that has fueled this drop, is because of the government, CBN selling forex to foreign investors to obtain portfolio investment, and also manufacturers. We saw that they injected about 1.47 billion into the forex I&E window in January. This is way lower than what they did last year, 2020, about 64% lower. This is just to show us that there is still this shortage, supply shortage of forex in the FX market from the official window. So if this continues, and looking at the global demand for oil, we hope that the spike in cases would not necessarily have a dampening effect on the demand for oil in Nigeria. So that would not affect our export earnings, and of course, export earnings to talk about our results. So we expect that coming months, if all these factors are the way they are, external reserve may increase as time goes.
All right.
So this is just before you go. This is the last week. I mean, from next week we're in the month of May. What do you see with all of these factors?
So coming months, we actually see a lot of more direction in terms of so many uncertainty, both in the foreign exchange market, in the commodity market, even concerning people's responses to MPC meeting that is coming up. So in coming weeks, as we see things unfold, there will be more clarity. There's a lot of sentiment and a lot of skepticism. So we hope that when there is policy direction and all that, we see a lot of improvement and clarity.
All right, let's look at the domestic commodity prices. Most of them are on the rise at this moment. So take us through the market prices.
So basically, one of the factors or major factor driving this upward swing in prices is actually seasonality. As we all know that we are in the planting season, and because of that, the supply of major household like tomatoes, pepper, sugar and the likes. Actually, these prices has actually gone up, except for commodities like cement.
Yeah, so
and
cement was
particularly,
down. Yeah.
yes, it's down because demand for construction has actually declined because we're in raining season, so people don't really engage in such activities. So demand for cement has actually that pushed down the prices. But going forward, and also the fact that we are in Ramadan season, demand for provisions and all that has increased and definitely will push up prices. So we still see this increase in price until probably June, when we start seeing harvest season and we start seeing more supply of food into the market.
All right. Thank you so much, Oluwambe Pelumi Olanubi, analyst with Financial Derivatives Company. Thank you so much for sharing your thoughts with us this morning.
Thank you for having me.
Thank you.
Yeah, well, we'll go over to the equities market now, and we'll take a moment, and when we come back, Eddie is standing by to give us updates on the equities market. Or Eddie has been standing by. I'm not smiling this morning, Eddie.
Yeah, I understand. We did see it coming yesterday, the 1.33% decline. It came as a surprise to all of us. I mean, initially we had seen the market up at intraday was up about marginally, and then just after the close of trade, we saw the market was down about 0.03 or 0.01%. And then later, we see that the market is down 1.33%. No one saw that coming, but unfortunately, that was largely due to the 7% decline on Dangote Cement. Now, the all-share index was down 1.33% at 38,781.48 points. Unfortunately, we've gotten back to the 38,000 psychological level. But to explain what happened in the market yesterday is Afolabi Bero, a stockbroker at Stabik IBTC Stockbrokers. Good morning, Afolabi. Thank you for joining us on the program.
Good morning, Eddie. Thank you for having me.
Could you just tell us what happened in the market yesterday and what was responsible for that decline on Dangote Cement?
So Dangote Cement was actually marked down for a dividend of 16 naira. So the price went from 220 naira to I think it goes at 204. So that was what caused the decline in the all-share index yesterday, which is why we didn't see it until after the market had closed. Outside of that, there were some crosses in the market at some premium levels. I think Nigerian breweries traded at 54. Surplus went up at 570. Not big volumes, but at least the prices are appreciated a little bit. But that's the effect of the markdown for the dividend on Dangote Cement was what impacted the index yesterday.
So a lot of analysts and other stockbrokers, had said that we should still be expecting some positive sentiment in the market this week due to the earnings coming in. But we've seen declines lately. Why?
So I think the major thing is that yields are inching up in the fixed income space. So that has generally affected the outlook for the equity market. So investors are sort of looking more towards getting better yields, rather than taking positions in the equities market. I think our time to shine was around when we were expecting the full year results, but that's all done and dusted now. And so I think more investors are mostly looking towards the fixed income market rather than the equities market.
So what are driving sentiment at this time? How has trading begun?
So it's been a bit quiet. We saw an initial decline in First Bank, but we're seeing some recovery. Julius Berger is up about 10%. There was a structured transaction that went through at the top of the market. But aside from that, volumes are generally low. We expect that as usual, the banking sector will probably drive activities again today. Mostly just outside of coffees, we don't really expect anything material to happen in the market today.
All right, Afolabi, thank you for your input on the program. Afolabi Mero is a stockbroker at Stanbic IBTC Stockbrokers. Now, the month-to-date was still at 0.7%, while the year-to-date return stood at minus 2.4%. The equity cap yesterday was at 20.570 trillion naira. Now, volume, value, and deals traded yesterday were higher compared to the previous trading day, as volume rose by about 2.8%. We saw 259.51 million units worth 1.91 billion naira traded in 3,500 deals. Now, FBN Holdings was the most traded stock in terms of volume and value yesterday. The sectoral performance was mostly negative. The banking sector was down 0.19%. Now, we saw declines from Access Bank, from GT Bank, from Zenith Bank. We didn't really see any gain from the banking sector, so that was expected. Consumer goods was also down 0.11%. Industrial goods was down 3.55%, and that was due to the 7% decline on Dangote Cement. And just like Afolabi had explained, that was because the stock was marked down. Insurance was down 1.61%, while oil and gas gained 1.98%. Now, the unlisted securities market was unchanged yesterday, as the NSI still stayed at 774.84 points, while the market cap was at 550.76 billion naira. We saw about 20.64 million units worth 533.01 million naira traded in 67 deals. Now, Ini, I was saying that since the admission of the shares of NGX on this platform, we've been seeing huge activity in that space, and hopefully, that would continue to boost liquidity in the unlisted securities market. For the fixed income market now, let's talk to Kaya Ewebi, fixed income dealer at FSDH Merchant Bank. Good morning, Kaya. Thank you for joining us on the program.
Good morning, Lydian. Thank you for having me.
So there was an auction yesterday. What was the turnout like, and how is that likely to shape trading today?
At the primary market auction yesterday, the DMO sold 129.46 billion, which was 41 billion naira more than the amount offered. The auction was oversubscribed with overwhelming demand recorded on the one-year paper. 90% of the sale was allotted to the one-year paper. 7.16 billion was sold on the 91-day paper, 6 billion on the 182-day paper, and 116 billion on the 364-day paper. The stop rate for the 91-day and 182-day papers were maintained at 2% and 3.5% respectively, while the 364-day paper gained 75 basis points to close at 9.75%. Today, we expect slight bullish trend on the NCD papers as market participants try to fill their net demand at the auction yesterday. And then going into next week, we expect the market to trade cautiously due to the low level of liquidity in the system, as well as market expectation of higher yield on the one-year paper at subsequent auctions.
All right, Kaya, thank you for those updates. Kaya Ewebi is a fixed income dealer at FSDH Merchant Bank. Now, the bond market was mixed yesterday, although slightly bearish, as we saw yields rise by just 1 basis point. Our yields at the short and the mid end of the curve were flat, while the long end of the curve saw yields expand due to sell-offs on the April 2023 bond. In all, there were 32 deals worth 17.05 billion naira ini. So we'll just wait and see how things play out in the market today.
We certainly will wait. Thank you so much, Eddie. Well, we'll take a break now. When we come back, we'll go to London. welcome back. We head to London now. Good morning, Juliana, and thank you for being there once again today. Well, our green seal collapse is still in the news, and now the MPs are saying that it could cost the UK taxpayer up to £5 billion. Social support of thousands of steelworkers is also at risk. Any end in sight?
No, not right now, Innie, and this is the first sort of fact-finding investigation. So there are several inquiries. I believe there are about 9, and the one that's being conducted at the moment is by a cross-group of MPs that make up the Treasury Select Committee, and they're really trying to find out exactly what went wrong and how the Green Seal collapse has become one of the biggest lobbying scandals for at least the past decade in this country, that has obviously got the Prime Minister Boris Johnson into a lot of trouble. From yesterday's fact-finding mission, there are suggestions that it could ultimately be the taxpayer that end up paying the hefty bill that has been left behind because of the collapse of Green Seal. And this all goes back to Sanjeev Gupta, who was once dubbed, the king of steel, the man who was saving the steel industry in Britain. Now, Liberty Steel, which was part of GFG Alliance, which was owned by the Gupta family. Apparently, when Green Seal went under, they owed, the GFG Capital owned Green Seal about £3.5 billion. This has also now led to the fact that Liberty Steel could indeed collapse, letting 5,000 workers go. And basically what the Treasury Select Committee are doing is counting up the numbers, and so that could cost the taxpayer £5 billion. It is just the start of the inquiry. So as the days and the months go on, we'll get to learn more about this.
All right, well, Apple, on the other hand, is smiling to the bank with $90 billion as revenue amid COVID-19. Going virtual in the pandemic actually pays them, right?
Well, yes, pandemic or no pandemic, Apple were always going to smash Wall Street expectations, which is what they've done overnight, really solidifying the fact that they are the world's biggest tech company with a market capitalization of $2.2 trillion. Yesterday's results were outstanding, the best March quarter on record for the company year on year. Their revenue is up 54%. They have actually cited the iPhone. Again, the iPhone, one of the most popular products to ever be produced in the entire history of the world, is still selling at record levels. In fact, it's not just the iPhone. All of their products are shown a double-digit growth, and services in Apple are doing exceptionally well. Services meaning all the apps we buy in the App Store, Apple TV Plus, Apple Pay, all doing really, really well. So, yes, no surprises that Wall Street were in absolute happy spirits yesterday when Apple confirmed that they are still the best tech company in the world.
But the UK has reduced its United Nations Family Planning Pledge. Why are they doing that at this time?
Yeah, this is an interesting story. It all goes back to November last year, Innie, where Boris Johnson's government confirmed that they would be reducing their aid fund from 0.7% to 0.5%, which knocked off about £4 billion of overseas spending. I've got a statement here, a very brief statement I'll read to you from the Foreign Office spokesperson. They have said the seismic impact of the pandemic on the UK economy has forced us to take tough but necessary decisions, including temporarily reducing the overall amount we spend on aid. We'll still spend more than £10 billion this year, more than any other country in the world. I think the reason why this is such a drastic and dramatic impact on the UNFPA is because it's such an important agency that helps millions of young women around the world prevent unexpected, unplanned pregnancies, helps them not go for illegal abortions, and it also provides family planning measures. They were expecting £155 million from the British government. That's been reduced to £23 million. Of course, they're not happy, but the British government say this is all they can do, and they hope once the UK economy does recover from the pandemic that they'll be able to increase that spend once again.
All right, Juliana, thank you so much for giving us that update. And we get ready for the afternoon. Chimi will be here with you. So now we move over to the crypto market, and we hear there's a new baby in the block. I wish I took a decision some time ago. That would have been in March last year,
yeah,
right?
the new baby smashing new highs. Ethereum up about 4% this morning at $2,715. It was actually 2005 earlier, but it's up about 4%, smashing new highs. Bitcoin still staying stable at 54,000. Let's look at the market cap, $2.08 trillion, up about 2.96%. The total crypto market cap right now, 24-hour volume traded, up about 1.08%. Bitcoin dominance, that number, 48.76. I'm sure that's thanks to Ethereum taking some of that dominance there. Hello, let's talk to Olumide Additional. Olumide, do we have you?
Yeah, you have me. Good morning.
Good morning, Olumide. Great to have you. Ethereum is doing amazing things, smashing new highs. What's driving this surge?
Yeah, crypto pundits are not so surprised. Don't forget that a lot of people have paid attention on Bitcoin while Ethereum has been outperforming many of these crypto assets. If you look at just in 2021 alone, Ethereum has had 58% return on investment, while Bitcoin is just around 90%. So there are so many factors that is pushing this asset to record high. If you look at the amount of Ethereum on crypto exchanges, is at a one-year low, suggesting that fewer people want to sell this priced asset. Another key fundamental is that a lot of smart contracts are being built on this platform. Just recently, a multinational bank, I'm talking of European Investment Bank, that launched a big account on the Ethereum network. And what that meant was that now banks and other institutions are seeing the use of Ethereum. And, you know, the likes of Goldman Sachs, Santander, and Society Generale facilitating that transaction tells you the credence Ethereum is having in the financial ecosystem. Another key fundamental too is that Ethereum is used for so many applications. If you take a look at DeFi finance, I'm talking about decentralized finance. A lot of people use it for staking, and just recently we found out that about 11 million of these coins are used for staking. So that suggests to you that it's really trending its name, called utility crypto, and while it's hitting record high and other coins are pulling back, many crypto pundits say that the sky seems to be the limit since it has broken the 2,500 resistance and now it's looking to the 3,000 because so ranging around that 2.7 for some days right now.
Okay, Olumide, so there's been this debate about Binance Smart Chain, taking over and flipping Ethereum. Is that still going to happen?
I don't share that. I don't share that bias because you see, the smart chain of Binance is really tied to the crypto exchange platform, and I'm talking of Binance. And well, a lot of people will tell you that Binance has a lot of trading volume, but one of the unique things you need to understand about Ethereum is that even when the Security Exchange Commission was doing this analysis, it said this asset is not a security, meaning that this asset thrives on an ecosystem. So I think Ethereum has a much bigger ecosystem, and the fact that it's not tied to any entity directly, which gives Binance that disadvantage, gives it an upside, and that's why you see those investment banks keying into that platform. So I don't see Binance in the near future, because we also have similar projects like Solana, managed by FCX and other things, also bringing similar things. But I think Ethereum has the front running. Really.
All right, Olumide, thank you so much. Always great to talk to you, Olumide. Enjoy the rest of your day. Thank you.
Yeah, me too.
All right, and there you have it. Your favorite coin, Ethereum, smashing new highs. It's looking good in the crypto market right now.
Congratulations, Ethereum family. But it's too late to buy in now. I mean, because we always need to buy the dip. But there'll always be another opportunity, I guess.
Yep,
but
get
remember,
financial advice.
Yeah, it's not a financial advice. Thank you so much for watching the show today. I'm Ini John Mekwa.
And I'm Ladi Williams. Thanks for watching.